US markets finished the trading week on a weak note. However, over the course of the week, the S&P 500 did make a gain of around 0.33%. And it was a similar situation here in Australia, with the market up by just 0.1% over the course of the week. Once again, Hong Kong proved itself to be the high beta market of the globe, up 2.4%. But overall, a mildly positive week for shares. Of particular note last week in the US was the disparate performance of Meta and Microsoft. Both gave strong capex intentions, but the market reactions were very different. Microsoft shares down 7.7% last week, whereas Meta was up 8.8%. Very different fortunes. It just goes to show at the moment in the reporting season, investors are in an unforgiving mood. On the other hand, they're prepared to reward good performances. So we're looking for further volatility in individual stocks this week as reporting season rolls on, and we see some of the biggest names in the US reporting their results to shareholders. Locally, we saw Drone Shield continue its trading performance. It was down 30% last week, having risen by more than 300% from its lows. So a volatility continuing in Drone Shield, and clearly its exposure to that defence thematic, one of the key drivers here. We saw excellent volumes in Drone Shield. Looks like it'll be another big week in trading there. But the really big news on Friday night was the huge plummet in the price of gold. Now, gold traded through a $760 range. That is extraordinary. In 40 years of markets, the number of times I've seen such a dramatic move in such a globally significant market could be counted on two hands. This is a very big deal. And it does look to me as if the bubble in gold has burst, and that could mean significant further downside. We'll come back to that in a moment because we've still got more to look at this week, including in earnings. Tonight we'll hear from Disney and tomorrow morning from Palantir, two big names in the US, and potentially game-shaping or game-changing results due. We've got a lot of earnings reports out this week, as mentioned. One popping up on my radar is Amazon, but we'll also hear from Alphabet, the owner of Google, as well as plenty of other names, including Uber, and a lot of exposure to the consumer stocks in the US. So we're getting a read not just on the individual stocks, but on the health of the US consumer or otherwise. We also have a Reserve Bank decision this week. Tomorrow, the Reserve Bank meets and will make a decision on rates. The market consensus is now towards a lift of 25 basis points tomorrow from the RBA. The market's now pricing a better than 70% chance of that occurring tomorrow. And it appears, given the inflation data that we've seen so far, that the direction for rates in Australia is upward for the foreseeable future. But coming back to the gold price, that huge fall in the price, it's now trading below 5,000 US dollars, is very significant because it completes what looks to me like a blow-off top formation. We saw strong gains in the 8 trading days leading up to last Thursday. On Thursday, we saw gold spot prices reach for a new high just below $5,600. That meant that it had climbed $1,000 in 8 sessions. It then failed at that level and rejected the highs just below 5,600. And then on Friday night, in a continuation of that rejection, we saw that huge trading range, $760 trading range, and a big fall with gold finishing below 5,000 and pointing downward. Now, retracement analysis suggests that we could be looking for a target for gold prices between 4,000 and 4,200 as a first stop. And as I say, if this is in fact a bubble bursting, the potential for an overshoot of that target is very real, as market conditions could remain chaotic for some time. Part of this was sparked by a rebound in the US dollar after persistent weakness and concerns about the outlook for the US economy. We did see inflation data on Friday night, which really scared many investors because of the persistence of higher prices for producers. This was PPI data, and that persistence in high inflation suggests that the tariff-induced increases in prices in the US are not over yet. And that, of course, immediately led to speculation that interest rates might not be falling as fast as expected, and that spurred the bounce in the dollar. And that bounce in the dollar really had an impact. I'd suspect that that was the trigger that saw gold prices fall. But it was interesting to note we also saw Bitcoin under sustained pressure and reaching for those lows around 76,000 US dollars that we saw last April in the tariff-induced madness in markets. So that big fall across the board does suggest that this is a concern about tighter monetary conditions. And if gold and Bitcoin are falling because of tighter monetary conditions, there's real potential for that idea to spread to the share market and see some share markets coming under pressure, particularly those very stretched, previously glamorous tech stocks that are trading at very, very rich valuations. So something to watch out for. We could also see a profit-taking pile-on develop in gold. A lot of people sitting on very significant gains. That sort of turnaround in the market could spark action. Silver prices naturally were also affected. Silver fell 30% at one stage during the Friday night session. And US silver stocks were down 17% on Friday night alone. GLD, one of the biggest ETFs around the globe, exposed to the gold price, is down 10%. And the potential for a drop to that target zone between 4,000 and 4,200 suggests that there's potentially another 15% drop before we get stability in gold prices. So it's very likely we'll see a focus in trading today on gold mining stocks and precious metal stocks generally. On Friday, Australian gold miners as a group were down 7%. We're likely to see further pressure on that sector, and particularly if we have got a bursting bubble in gold, that pressure could continue throughout the week. Newmont, turning to our watch list. Newmont Gold, the largest listed gold miner in the world, fell 11.5% on Friday, clearly tracking the drop in the gold spot price, but it was the third worst performer in the S&P 500 on Friday. A number of analysts have looked for a stabilisation around current levels. UBS, for example, has a target price of 160, and given it's trading at 157 at the moment, that doesn't seem like a big stretch before trading begins today. But of course, if we see that pressure flowing through, 160 might recede in the rear view mirror as markets readjust to the potential for lower gold prices instead of higher gold prices. So Newmont, one to watch, a good indicator, not just of what's happening with the gold, but where sentiment with investors is. And if gold does stabilise and the US dollar stabilises, we could see bargain hunting coming into the sector. However, the disruptive trading, the chaotic trading we saw on Friday night suggests that we're at least a few sessions away from any stability in gold prices at the moment. Another stock to watch this week is Palantir. It will release its reports tomorrow morning, our time. It dropped 14% last week in the lead up to this report. There are some concerns that the expectations have become very lofty. It's down 29% from its November 3 high. So we have seen some moderation of the stretched valuation in Palantir, but we're expecting fourth quarter revenue to be up strongly. Analyst consensus is around a gain of around 63% to 1.34 billion. But even at that sort of elevated earnings level, the stock multiple here is more than 300 times. And despite that moderation in the price last week, there might be further PE compression coming into Palantir, no matter what happens with its results announcement tomorrow. And turning locally for the third stock on our watch list today is Santos. It was up 10% last week, and oil and gas stocks have been out of favour for more than a decade around the globe, and that does continue to be the case. Got Santos trading at much reduced levels, but nonetheless up 10%. It's up 13.6% year to date, and the rally is ahead of the fourth quarter results. Cash flow up 30%, revenues up 9%. A number of analysts have a buy rating on Santos, although others are more modest about the outlook. But nonetheless, at this stage, potential for gas to be re-engaged in the mix for the Australian energy markets is a real possibility. And if Santos gets its Narrabri project up and running, it may well be a contender for revaluation or re-evaluation in light of the improved prospects for gas and oil stocks.